let's do a very quick review. We'll start with, like I was saying earlier, the fundamentals are different. So this is today's daily. Uh, we were looking at the NFP last Friday. There was a bounce. Here there was a bounce after NFP. Market bounced higher. And this shows that there is an equity rise on poor fundamentals. And because the Fed is going to be discounting rates faster on stable political outcome, or sorry, to stabilize political outcome. So the Federal Reserve can start cutting rates as early as Wednesday. Maybe they will actually cut rates on Wednesday by 50 basis points. Sterling and rises higher, even during US elections. And therefore, this is what we're going to trade. And the market is trapped, we believe, between support at 195.40. Actually, market bounced 195.70. The next leg on cutting rates, either out of the Federal Reserve or out of the Bank of Japan, or outside of the Bank of England, or both, will drive the market to 198.30. We're looking to take a bounce out of a level one. We're still doing something like shoulder levels, like that level three, maybe a bit higher levels, right? The pattern also is very important to focus on. So this is moving higher. Previously, we had anticipated the market to move lower, and we're looking for a break to test 188.30 and test level ones, right? Because there is a hawkish cut by the Bank of England, and there could be, let's say, the bank could begin to buy gilts. There could be more investment opportunities in Great Britain. Instead of doing shoulder levels to the downside, this was the initial projection, right? So we believe the market is going to be doing shoulder levels or head levels to the upside. So of course, looks like head levels, not really shoulder levels. So this is the current projection. We move to 198.30. We may even move higher. The market retracts. Maximum is the neckline, level one, 188.37. The market bounces again. What we are really seeing is leg B has finished at that point. So the high degree A, and B, and C. Leg B finished at that point. And still do 1, 2, 3, 4, and 5 into leg C to consolidate the head level on the premise that the Bank of Japan isn't really in a position to raise rates and that there is good investment opportunities in the UK and that sterling is undervalued, right? Therefore, we get to see another second head level before the market rejects at over both levels. In a nutshell, what you really want to focus on is that you are trading this trade cycle. This between neckline at level 1 and neckline at level 3. The market will always reject the level 3. Of course, attack it and fall back. So it doesn't have to reject 198.30, but it will give you the impression it's not supported and fail. 199, 200 and fail. You always want to sell at level 3. You always want to buy at level 1. Long term. Like now, we are moving from the current level 197 to 199 and to level 3. All right, let's take it to trade management. So the projections come that we're buying 197.70, 198, 197.17, 200, and 201. We get to see the internal segregation. One will go to the shorter term frames. And we get to see the internal segregation here. So again, we are still moving between A, B, and C. These labels, we have the 1 to A2, B to C, we have a internal 1, 2, 3, 4, bounce out to a level 1. The move, if it bounces out of that internal level 1 one more time, takes us to 199, 200. The best, of course, is to do the entry going into the Federal Reserve meeting on Wednesday, going into the Bank of England's meeting on Thursday. It shows here more detail on the 4 hours. That's exactly what we expect we're going to be trading. Are we having a trader? Not really. We're close to, maybe, if we break above overbought level on good support on on the minutes, 30 minutes and 15 minutes. We have a 1, we have a 2A, 2B, 2C, a 1 and a 2, 3, 4. We're still waiting for 5 to equate with a 3, maybe do a 4, we'll bounce a level 1, and then do that 5. We expect, remember, to trade between 197 and 201 and 200. This all relates to what we were just saying on the daily. The trade cycle, level 3 and level 1. Of course, we're nowhere near level 1, so the best is, of course, close to the neckline itself, which is 197 and 198. Level 3 is what you need to focus on, 50% between 202 and 198. We're looking at 201, 200.7, these kind of levels. And that's what gets you here. 200.7, even 202.7, but it's really 200.7. This is the top of that level 3. We'll be attacking it several times. In 3, and then retract back in 4, attempt to buy 197, 196.80, and then attack it again 200.7 in a 4B, 4C, and then a 5 before the market finally gives up. We just focus, of course, on the most immediate trade, and the most immediate trade is the bounce out of that internal level 1. Let's take it to 45 minutes and then to 15 minutes. So the segregation 1, 2 here in bracket 3, 4, and 5 is what gets to show on this 45 minutes. 1 and a 2. Turn 1 and 2 in yellow, 3 and 4 in yellow, 5 in yellow is a 1 and a 2, 3, 4, and a 5. Everything here is correct. Bounce is, of course, made up, maybe, because it's very valid. Top of a level 1, right? That level 4 bounce, of course, top of a level 1. This is the move we are buying it. This is level 5. And it will, I think, occur before Federal Reserve meeting. Today we had a bounce out of that internal level 1. So we have a 4 in bracket, we have a 1 and a 2, dot 1, dot 2, 3, 4, and 5. This all has worked out. Market attracted, bounce at level 1. We buy now, even if it is not yet the Federal Reserve meeting, because I doubt that we're going to get a 4A, 4B, and 4C. Just one internal 4, market is going to move to 200, it's going to move to 200.7. Take this to 15 minutes, very close to what we have on the 45. When we go live, you find you just did that bounce, 196.78. Okay, so if you think it is prudent, we buy it. We're going to be moving 199.60, 200. If the Federal Reserve cuts rates by 50 basis points, it's going to be 200.7, or at least resistance 2 on the hourly time frame. Buying level 1, we just you need to have a hedge 2 internal supports from entry. So you're assuming, for instance, we buy a market, we have a hedge below that level 2, around 196. Let's take it live. $197.20, level 1 got bounced at 196.65. Let's take this to 15 minutes. Negative. Take this to 5 minutes. You don't really think this is a confirmation, even if beginning to look like a confirmation. Take this to 3 minutes. I believe this is a growth, 1, 2, 3, 4, and 5. Should look like a growth segment. So very close to a day, end of day today. So it should be a same volatility. We can still get, I believe, 197. Over here showing 196.95. We can still get 197. Even if we buy 197.20, we just want to have a stop at 196.50. because I don't think we are going to fall below level 3. If we do the internal segregations, we are supporting now level 3. So if you think it is prudent, we buy market. The hedge is just below level 2. 195.30 is too low. We're in at 197.30, so the hedge is just below internal level 2, 196.30. At this point, it's 100 points. So the market here is a buy, the hedge is 196.30, the hedge can be 196, just below that internal point. And we expect to see resistance too this week. 200 is resistance to leg 5, showing right there. On Federal Reserve meeting of reducing rates and Bank of England reducing rates. Just resistance to 200, not 201. So resistance to is actually, so just resistance to is I'm sorry, 201.8. In between is 200.7. We've been seeing that 200.7 several times. So we go for 200.7 or go towards end of Bank of England's meeting, end of Thursday. All right, so sterling yen is a buy. It's a position trade. We buy market. We have all close to market as possible, just 15 points below the market. We have a hedge at 196, 196. Market is around 197.26. And we're going to close end of day Thursday. We will attempt to take profit at 202, 201.84 or 201.9. If we don't get there by the end of Thursday and we're at 201, for instance, 200.99 is showing here, we close out and we take profits. All right, I believe we have come to an end of issues and questions and time. So I'm sorry we will not be able to do a recap, but I believe I promise tomorrow we'll go over all the issues that we are going to be trading into the US elections and hopefully selecting which would be the best and the most volatile to focus on during release of the election results. We'll also be doing a very detailed scope of how to trade gold tomorrow going into, of course, the US elections. All right, with this, I'll leave you all tonight. I hope we have covered all issues and are going to be prepared to trade election volatility. I hope we'll also be all making good equities this week. It's really been great having everyone with us throughout our session today. We look forward to be all together again tomorrow. With this, I'll leave you all tonight. Wish you all the very best. Take good care of yourselves and good night.